Prime US REIT announced their financial year 2021 results on 16 February 2022. The stock price has dropped 10% since then. Is it a good time to buy now? My view is no. Let's see why. I will be talking about Prime US REIT, or Prime REIT in short, with stock code OXMU. Do stay to the end of this video, where I will be doing a comparison on Prime and another US office REIT. As always, this is not investment advice. The 5 parameters of Prime REIT are shown. 4 out of 5 parameters met my personal preference. In my opinion, that's great. The average cost of debt is at 2.5%. Quite okay in my opinion. Let's zoom in further to check out what are the factors that can affect the parameters for this REIT. As the interest rates are expected to rise in 2022, it's important for the REIT to have their debts pegged to fixed interest rates. Prime did a great job in this, with 87% of their debts pegged to fixed interest rates. If the interest rates increase by 1% on floating interest rates, the effect is minimal. DPU of Prime REIT dropped 2.3% when compared to FY 2020 even with the strong positive rental reversions. Prime REIT is listed since 2019. The occupancy has been dropping and the rental reversion has been increasing, resulting in a relatively flat DPU. The occupancy rate is something that investors should certainly keep an eye on in the next business update. A red flag for me if the occupancy goes below 90%. The good news is that the lease expiring in 2022 is low at 11%. Hopefully, they can retain their existing tenants and find new tenants for the vacant office spaces so as to keep occupancy above 90%. Prime REIT top 10 tenants made up 38.7% of their cash rental income, with the top tenant contributing to 8.2% of their cash rental income. In my opinion, I would prefer the top tenant to contribute less than 5% so as to minimize concentration risk. Prime REIT's major shareholders are shown. KBS Limited Partnership is the major shareholder at 18.45% currently. This form from SGX shows the change of ownership of substantial shareholder. On 12 November 2021, there is a change of percentage holdings to KBS Limited Partnership Holdings. They reduced their shareholdings from 24.8% to 18.5%. There are many reasons for someone to sell a stock. Hence, I will not be speculating why they sold. As an investor, it doesn't paint a good picture to me on the stock if the major shareholder is selling instead of buying more. Do subscribe, like and turn on the notifications if you enjoyed the content. Thank you. Next is the technical analysis of Prime REIT. We are looking at the weekly candles chart here. The aim is to assess what is a good entry point. For the past 4 weeks, the share price has been on a downtrend. However, 73 cents looks like a strong support zone as the share price bounced off the support for 2 consecutive weeks. If this support zone breaks, the share price will be moving towards 68.5 cents. In my opinion, that's a good entry point. At 68.5 cents, the yield will be very attractive at 9.9%, calculated based on FY 2021's DPU. This estimation, in my opinion, is reasonable. As mentioned earlier, we are looking at 11% of leases expiring in 2022. I don't foresee Prime having issues retaining their existing tenants and find new tenants for the vacant spaces. Also, there's a huge margin of safety if we collect Prime REIT at 68.5 cents. Some of you might ask, since there is a strong resistance at 73 cents, why not we start collecting from here? The reason is because I have my eyes on another US office REIT, which I will be comparing to Prime US REIT in a while. To summarize, what I like, dislike, and things to take note about Prime REIT is shown below. Please pause the video here if you want to take some time to recap. Let's see what other analysts have to say. Maybank has a target price of $1.10. They also see better fundamentals ahead as physical occupancy recovers, with catalysts from improving leasing activity and upside from acquisitions. Maybank also sees that the backfilling of the vacant office is underway and management expects occupancies to bottom out by first half of 2022. They have forecasted a growth of 5.2% in FY 2022's DPU. Lastly, let's do a comparison of Prime US REIT with Keppel Pacific Old US REIT. Their parameters look similar, and I would like to point out what attracted me to Core over Prime. Firstly, Core has a rising DPU, which is better than Prime's flat DPU. Secondly, Core has a more diversified portfolio, with their top tenant contributes to 3.4% of their gross rental income, and their top 10 tenants contributing to 22.6% of their gross rental income. That's much diversified than Prime REIT. Let's also look deeper into the occupancy rate. These two tables show the occupancy and rental reversion rate of Prime and Core. We can see that Core is less affected by COVID-19 than Prime in terms of occupancy rate. However, Prime is doing a better job than Core on the annual rental reversion rate. As Core has more plus points, hence I will be collecting Core ahead of Prime. Do check out my video on Core at the top right hand corner if you have not watched it. This is a list of reference I have used to create this video. Do subscribe and check out my other videos. Have a great day ahead.